자, 이제 STO 서밋의 오후 세션 시작을 해보도록 하겠습니다. 오후 세션의 첫 번째 발표는 일반 투자자를 위한 실물자산 투자 기회라는 주제로 앤드류 더지 리퍼블릭 대표님께서 진행을 해주시는데요. 대표님 무대 위로 오실 때 여러분 큰 박수로 환영해 주시면 대단히 감사하겠습니다.
Hello, can everyone hear me all right? All right, great. It's always tough going right after lunch because everyone's like a little bit sleepy. So I'll try to keep this moving and keep it fun. Interesting thing about what's a lot that's being talked about today, obviously, is STOs, but the area that I feel it really doesn't get enough attention is probably the area that's going to be the loudest is how to deliver these real-world assets to retail investors. I'm going to go through some real examples. I'm going to go through how we finally got to where this is actually viable, and what you're going to really be seeing in the future. So, great to meet everybody. My name is Andrew Durgee. I'm co-CEO of Republic. I'm operational engineer. I've been in the blockchain space for 15 years. Nearly from the beginning, though I always felt I was about a year late, even being there for as early as I was. I was CEO and co-founder of a company called the CoinTree. We were the first doing multi-sig security and storage for Bitcoin 2011, 2012, and 2013. We helped put multi-sig live on Bitcoin Core in 2013. Back when you can actually update the chain, now that's particularly difficult. Became a partner at TLDR Capital, which was the #1 ICO advisory firm globally. 2016, 17, and 18. Every major ICO ran through us back then. It was a really wild time. And then ultimately joined Republic to build what was meant to be the first vertically integrated crypto investment bank. And we finished that integration just about 5.5, 6 years ago. Over time, the crypto side of the business at Republic became so significant, it actually became about 95% of Republic's revenue, that we took all of Republic and made it Web3 native, or digital first, and that's how we sit now. Republic itself is really a digital merchant bank, very similar to something like a Web3 Goldman Sachs. Now, you know, the real question is why tokenization? And I really open with this because I think it's important to identify a couple very, very clear narratives that have been and remain consistent. And it's really 4 pillars, 4 items. Speed, value, scalability, and access. Those are really the 4 primary drivers as we look at tokenization. Why people are moving towards tokenization, why people are investing in tokenization, why you're probably here learning about tokenization is always going to come down to one of those 4 things. And you'll see as I move through this how each one of those really relates, you know, ultimately to some of the real use cases that are taking place now at scale. Now, I think we heard a little bit about this at the last presentation, but I always like to show what really was one of the first true tokenization projects now as it relates to security tokens. Security tokens have been around a long time. Really, you know, even back into 2015, there was starting to see some early stages of real-world assets on chain. But the first one that really happened and really kind of broke the ice was this St. Regis tokenization, where they took a hotel in Aspen, fractionalized it, and then sold that to accredited investors. And this was a huge movement at the time. Everyone thought this was going to open up that entire industry. But it really struggled. It was really the first of its kind, really struggled to find liquidity, struggled to find buyers, sellers. There really wasn't an environment that was really healthy that could really drive interest in the asset. And even though the asset overall has performed very well up to this point, it still just was missing pieces. And only recently have those pieces really come together. And that's why you're in this room today, because those pieces are just starting to fall into place. Now, you know, what has changed? You're looking at changes that take place on both a macro scale and a micro scale. There's also a significant amount of jurisdictional arbitrage that's also taking place that's moving this industry forward at rapid paces. You have some jurisdictions that are more aggressive, you have some that are being a little bit more subtle, and we'll even get into some of that. But adoption is really the word that comes up the most. I always avoided putting this in my decks. I always avoided talking about the word adoption because it always felt like it was something that was right there but really never attainable. But now we're seeing it, and we're seeing it at scale, and we're seeing it at the institutional level and at the retail level. But let's start at the institutional side. So Larry Fink, he's the CEO of BlackRock, extremely pro tokenization. Obviously, they've done an incredible job with the BUIDL product. But now they're starting to see what the future of this really looks like. And this isn't in the billions. This is now aiming very clearly at the trillions. So he really breaks down, and this is a report from JP Morgan, BlackRock, Goldman that have all really worked on this together. But you can see the scale and the speed of which this is moving at, right? And these are real targets, real numbers. You're looking at over $5 trillion of assets that will be tokenized within the next 5 years. To put that in perspective, that's almost all the value of private equity and venture capital. That's how significant that is, spread across sovereign debt, real estate, private equity, venture, and into repo, securities lending, marginal collateral. It is running in this direction. Now, Republic itself has invested very heavily into Korea. We're very bullish on Korea, right? We want to see this happen in Korea. We believe that the Korean market is really excited for this opportunity. We really need to get the regulatory frameworks here cleaned up that can make this viable. But this is going to happen globally, whether Korea participates or not. What's the other thing that happened? Well, back in my hometown in the US, we had a massive administration change, and with that came an entirely new regime of how to approach digital assets and just the Web3 space in general. We have seen massive changes, whether that is at the administrative level, at the SEC level, the CFTC level, and even down to SROs like FINRA. Every single aspect of the US government now is taking this industry entirely differently. I just spent 4 hours at the SEC in Washington, D.C., in their headquarters, which is normally something you don't want to do. But that was one of the best meetings I've had in D.C. in my entire time in this space because they were so open to the ideas and pushing forward with innovation rather than being focused on enforcement. This is a 180 from what we've been experiencing. We're seeing the industry completely come back to the United States, and I really want to highlight this because I think it's something important when you're talking to your own regulators to see what type of impact that has in innovation within your own country. So massive changes at the administrative level. And then you start to see what is this thing really going to look like, right? So when you really start to add in all the areas where tokenization are really viable, it's not the $5 trillion number. You start to get closer to the $10, $11 trillion number by 2030. This means it's going to touch nearly every aspect of every financial institution. And it doesn't seem to be slowing down. The great thing about blockchain is it's completely agnostic, right? It's not targeted at any one thing. It's about improving everything across the board. Again, speed, value, scalability, and access. And those 4 things are what represent overall what you're seeing in here as far as growth in the space. The other big change that's really started to happen is the vertical integration of the industry. In the past, it's been very difficult to participate within the security token space because the infrastructure itself just wasn't there and required a very disjointed and very painful process. So here's just a really great example. If you wanted to touch security tokens a couple years ago, you'd have to work with 6 different companies. You'd have to work with a tokenization company. You'd have to work with a primary issuance company. Have to work with a wallet. You'd have to work with a custodian. You'd have to work with a transfer agent. And then you'd have to work with a secondary market. And you'd have to pass KYC or KYB in all those environments, have different accounts, different logins. It was incredibly painful to participate. So what you're starting to see now is an aggregation of these services into single environments. Very similar to what you saw, say, in primary brokerage with like a Morgan Stanley or Fidelity. That's what you're starting to see now. That's the maturity of the space moving in that direction. It's essential that this takes place so that you can bring in retail. Because if you have to have a retail individual have 5 or 6 different accounts, they just won't do it. It just won't happen. If you had to go to 5 different vendors to buy an iPhone, or I guess I'm in Korea, so buy a Samsung phone, you just wouldn't do it. It would be too difficult. So now we're starting to see that change take place. So Republic is really one of the first examples I've done that. We've completely collapsed that stack. So now all of that sits within one environment, and this is why we are able to roll out security token offerings every day for both retail and institutions. So one account, one KYC, one wallet, all 6 businesses. Now we're the first to do it, but there'll be more. There's going to be more that come, and I hope there's more soon. And you're going to see some, and there'll be one here in Korea, no doubt, that follows this model, because we already know that this model works. We've seen it happen in traditional finance already. We're seeing it happen now in the Web3 space, and this is the only way to really scale. So, what's possible? I always say, if you take someone from my team and you put them on a panel, and you put them on a panel with other people doing space and doing things in the RWA space, there's one fundamental difference. At Republic, we don't talk about theoretical. We're generally always talking about something we're truly executing on, right? It's no longer dreamscape for us. This is stuff that we are doing now. For example, tokenization of sports clubs. We just did Watford, it's a football club in the UK. We have a variety of the football clubs that we're doing. You're going to start to see cricket. You're going to start to see baseball. You're going to start to see hockey. Everything is moving now to into this direction. And it makes complete sense, right? These are community-based businesses, fan-based businesses, and if you have the ability to give or sell equity to the fans, you have fans for life. And what's really special about tokenization, it's not just the equity that you're providing them. Because it's tokenized, you can build in utilities, build in features to the tokens themselves. So not only do you, maybe an owner or a fractional owner of a football club, but if you have a certain amount of ownership, you have your own entrance to the stadium, you have your own merch, you have early access to tickets. It changes the way that you engage with your fans, and it changes what being a fan means. I'm actually dying to do a Korean baseball team. So if anyone has any relationships with Korean baseball teams, let me know, because that's like very high on my list. But we're doing this. This is, again, not theoretical. This is at scale, working now. Tokenization of film. Almost every film deal that we've done at Republic is sold out nearly instantly. This is just one example, Pressman Films. This is a really incredible process, because what you're looking at now is really upending and disrupting the film industry. Previously, if you wanted to make a film, you'd have to go to a studio, you'd have to pay nearly what would be considered predatory lending fees to the studios in order to make the films. But now, you can simply go to your fans, raise the capital from your fans, and now they are attached to the upside of the film on the go forward. So now all those fans are tweeting or TikToking and marketing that film on your behalf because they're attached to the upside. And every time there's royalties, they get a distribution to their phone, and they get a notification on the phone, you just made $5, $6, $7, and there's just constant dopamine hit. So it's the first time now that you're seeing where retail have the ability to start making money on the things that they actually love. And then again, you build utilities into it. You have a certain amount of tokens, you have a certain amount of equity in the film, you can meet the cast, you can go to the premiere, maybe you can be an extra in the film. It's truly endless. And so now, this fundamentally is changing how directors and how producers and how actors are now looking to make films. And it could only be done through tokenization. Could not be done without it. So those are some fun retail examples. And we have, dozens and dozens of them. But also, you start to look at more institutional style products, tokenization of funds. We tokenized a 40 Act fund, Hamilton Lane, which is a a very large financial player in the US, and I'm sure they have a presence here, have an unbelievable performance at nearly 30% of their for the annualized returns. But now for the first time, retail can participate in that product, right? Access. When we looked at sports or we looked at film, retail's never been able to participate in those industries. We're talking about unlocking entirely new asset classes. This is just another example of another asset class that retail has been held out of that now they have the ability to participate in. One of my favorite parts about the Hamilton Lane product, and this is very true for most financial institutions, particularly in the US, is 90% of the employees at Hamilton Lane cannot invest in their own products, because they're not what's considered an accredited investor in the US. That means only 10% of the employees at Hamilton Lane can invest in the own products that their company actually makes. That changes. Now that we've gone through the tokenization process, now that we have the ability to drive retail into the product, for the first time ever, Hamilton Lane employees can now participate in their own products. I want you to just take a moment to think about that, because that changes not only the business model of Hamilton Lane, but it changes the relationship between Hamilton Lane and their employee base. I think they have about 1,000 employees. That means 900 of their employees have been held out until this moment. And it's not just Hamilton Lane. That goes across the board with other financial institutions, BlackRock, Blackstone, Franklin Templeton, et cetera. That 90% model is very consistent across the board. Speed, value, scalability, and access. And again, really checking all 4 of those boxes. But the real big one that we've done recently, and where we really saw some wild parabolic growth, is we've started to tokenize exposure to private stock. SpaceX, OpenAI, Anthropic, and so on. We have never seen interest at this level. For the first time ever, retail can now have upside in SpaceX. It's the first time since the 1930s, the United States, that has ever been viable. Again, only possible through tokenization. We did 500 million of interest in SpaceX in 5 days. That's how large of an appetite there is for that asset class. And I think that would do actually extremely well here in Korea in particular. So again, when we look at what does the future look like, these are all different examples that are completely unrelated to each other. But that's how agnostic the space is and how disruptive ultimately the space is. We actually do not need the permission of any of the underlying businesses to do these offerings. That's how unique of a financial product and financial structuring that this is. Most of the wealth that is created takes place in the private markets. The private markets themselves is where most of the wealth creation happens. If you look at the public markets, you have less and less companies going public. You have a lot of poor performing IPOs, and you have even public companies going back private. Hyper-scaling, hyper-value continually happening at the private side, and retail has been kept out of it, particularly in the US, for almost 100 years. That now changes today and on the go forward. And that's why we're seeing this interest. Why was there parabolic growth? Because we were delivering a product that people wanted. And it could only be done through tokenization. This is a real STO, real RWA scenario that's operating at scale. So, by the way, you can check us out, republic.com/mirror. You can see all the different types of offerings that we have there as it relates to kind of these pre-IPO access and pre-IPO exposure. In Korea, you can participate. There's nothing that keeps you out of it. So, just to leave you with that, it doesn't end there. It can be done with music, can be done with precious metals, gold, silver, diamonds. Again, completely agnostic. I encourage all of you to push the limits as much as you can. Really lean on the regulators here, because I think that they've really kept Korea out of the market, and you don't want them to miss the boat. I think Korea is probably one of the best markets for this to be rolled out in, and I'd really, really, really love to be a part of it. So anyway, thank you all for your time. If you have any questions later, I'll be around. Thank you.